The following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity. Prepare for your retirement. Safeguard your savings. And nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, in your retirement here on the show. Our show is all about building up wealth, understanding the world today, and protecting yourself from retirement. Typically what we want to do is we want to put away as much money as we can and then conservatively invest it and then prepare, watch the big trends in the world and try to take advantage of some of those. Our motto and our philosophy is to save aggressively and invest conservatively. Save aggressively, invest conservatively. That's the key to building up wealth over the long term. Now, we've got a lot to talk. A lot to talk about in the show today. We know what's happening with Donald Trump. What's happening with the changes? Again, things are moving along very quickly. What's happening with the markets and where things are going here in the future? So I want to just kind of kick it off talking typically just about the importance of saving money. Put away 10% plus your company match into your savings plans. It gets you about 13%. That's a minimum kind of you need. Actually, not a minimum, but that should get you where you need to be for retirement, regardless of how much you're making. Whether you're making $30,000 or $300,000, it's the same type of situation. And so you want to put that money away, get the tax deductions, and then get the tax-free growth. You want to let your wealth build up, and then you can pull it out over time, over the long term. Now, I've got a bunch of stuff, and I sort of have an outline of what to talk about. But I think we want to continue to talk about these big trends that are happening out there, and looking at the markets. We've had a big move up, but there's a lot of changes happening. Donald Trump is putting in huge amounts of changes into the economy. And those are going to have long-term. They're going to have long-term consequences. And one of those things we're looking at is that we're going to see cuts in government spending. We're going to see big cuts there. We're going to see tariffs. We're going to try to put America first. We're going to bring back manufacturing. We're going to redo the Defense Department. This is a huge one. Look, right now, if we go to war with China, they're going to beat. Just my opinion. I think they're going to beat us. You never bet against the United States of America, but we have a military that isn't hobbled. We've shipped a good portion of our munitions over to the Ukraine, and one of the most ridiculous wars I've ever seen is that there hasn't been enough of them. We've emptied out our weapons, our warehouses of bombs, of missiles, some to Israel too, bombs, missiles, all types of specialized gear, equipment, Stryker, the different types of armaments, tanks, all types of things, bullets. And so we can't fight a long-term war. Our missiles, the Patriot missile systems, rather than the Patriot missile system sitting in the United States to protect us against an attack of some type, they've been shipped all over the world. We're even pulling them out of Israel and moving them over to the Ukraine, and so if China's sitting there, I mean, they can come in and take us out. And we don't look. Can we hold our own for a month? Yeah, sure thing. But since, when we go back to the different forts around, I don't want to use any names, and say, hey, send us more missiles, send us more bombs. Well, we're out of them. Where do they go? They went to the Ukraine. It's not just that. If we look at our military industrial complex, these guys are great at building the finest fighters, the finest missiles, the finest finest everything in the world. The problem is they want long-term contracts. They're going to run 20 or 30 years to build out the systems. And look, you go into a war, you're going to use up your missiles in the first 2 months, and then you're going to have to produce more missiles. And they go, yeah, look, well, we can complete your order by 2025, and by then we'll all be speaking, by 2030, 2035, by then we'll all be speaking Mandarin. And so they've got to move quickly to come in here and try to clean this up, modernize our military, but more importantly, create a military industrial complex that can quickly produce weapons that work long-term in battle, not just in, flashing around the airfield, but in long-term battle conditions that can be quickly rebuilt. I mean, the idea, the Chinese can build a ship, I'll say in 2 years. It takes us 8 to 10 years for the same thing. It's absurd what we've allowed to happen in the United States of America. We've got to clean that up. It's not just there. It's in healthcare. It's in United Healthcare. They're looking into them for Medicare fraud. This just came out, and what happened is they had doctor services. They'd be billing a certain amount. United Healthcare would buy out the doctor services, and all of a sudden the cost of everything started going up because they were recoding everything and basically ripping off Medicare. I mean, this is happening in every industry out there. You look at this ridiculousness that's going on with the USA aid, and more importantly, some of these grants shoved $2 billion to Stacey Abrams for, keep in mind, it's something to think about. And there's $20 billion of these different programs that they've shoveled out to different radical Democratic groups. What probably won Joe Biden the election more than anything in, 2020, was Mark Zuckerberg, who's now, quote, our friend on the Republican side. Don't believe it. He's going to shift the minute he sees the wind change. But he put $400 million into the Get Out the Vote programs in the country, and that was probably the difference if you really sit down and analyze the whole. Well, these guys have shoveled out billions and billions of dollars to all these radical organizations. They're going to have to claw that back. So Donald Trump, they're laying off in some areas of the government 8% of the workforce. Housing prices are falling in Washington, D.C. What I want you to understand is, look, there's a lot of stuff happening out there. They're moving in warp speed to get things done. He's done a couple things. What's he doing different from other administrations? A couple things. He's getting incredibly talented people that aren't captive of the kind of the deep state. So they maybe are very good people, but they come in and they basically owe people so many favors in Washington that nothing ever changes. They're going to go in and cut this and do that, and pretty soon, by the time they talk to Congress and everything else, they cut a 1%. Off of the budget, but then they raise it 3% for inflation, so things keep going up. He's hiring outsiders that look at a problem differently, that look outside of the box to get the problem done. He's hiring very bright, can-do people that have gotten things done, they can get things done, they can see the problem quickly. He's brought in the DOGE Commission. What did he do? I mean, honestly, if it had been me, I would have brought some people in from every department and said, hey, where can we cut costs? I would talk to a whole bunch of people. Instead, what he did was he went in, he brought in technical people that analyzed the spending. And they were able to determine, based on some other things they've done in the past, where the spending was clearly out of kilter for what was being done. And they looked at it completely. They looked at the problem utterly different. And this is why they've gone after the spending. This is why they've cut out the spending right away, because they're realizing they went to the payment system so they could see where the money was actually going. So typically the past presidents would get these reports and they'd look kind of good, and we're going over to defend democracy in Peru, and this is good. We're spending $50 million. Yeah, we need to protect democracy. But what he's finding out is, wait a minute, this went to some transvestite opera or something or whatever it was there for $3 million. What was that? Once they started looking where the money went, they're going, holy cow. Tell you something fascinating about Washington. If you look at Houston, Texas, okay, people are doing well. They made a bunch of money in the oil field. They get a big house in River Oaks or Tanglewood. They get a ranch, and if they're really big time, they have a plane, and in LA, the big movie producer, actors, they're tooling around town in a Ferrari, and it's great. They got a big house in the Beverly Hills, and they're all over the place flashing. Here I am in Paris at whatever with this $1,000 bottle of wine, and you go up to New York. You got a bunch of financiers and private equity guys, and these people, here's a picture of me in my $15 million house in the Hamptons. Oh, look, I've just got my new G5 jet. It's just one thing after another. You go to Washington, D.C. A friend of mine was up there the other day, and he went up there for a class reunion, and he grew up in the area. And he said, Ted, the place is immaculate. You go into these neighborhoods that are immaculate, but they're not flashy. They're not these $50 million houses. They're not the gigantic houses in River Oaks and in different places. They're not flashy. People aren't driving around in Bentleys and Ferraris all over the place. Everything is understated. He said everything is immaculate. Well, the reason these people, they don't want you to know how much money they're making. The guy in Houston or Dallas or Hollywood or New York City, they're happy. They've built up their wealth. They don't mind. They're not afraid of showing it a little bit and flashing. These people, they don't want you to know how much money they're making in Washington, D.C. Now, keep in mind, in Washington, D.C., 7 of the top 10 most wealthiest zip codes in the United States are at. So I named 3 or 4 other areas: Dallas, Houston, Hollywood, San Francisco. Same way with tech. Look at my 300-foot yacht. In San Francisco, all the tech guys have got these big yachts. All those people. You would have said, well, that's where all the money is, Houston, Dallas, Hollywood, San Francisco, New York. You wouldn't have said Washington, D.C., but Washington, D.C. has 7 of the top 10 wealthiest zip codes. That tells you how much money these people are making up there. They don't want you to see that. They're very understated, very laid back. It's not because they don't want to up anybody. It's because they don't want you to know how much money they're making. Donald Trump is cleaning house up there, and so he's moving quick. He's hired the best team. The only comparisons in 100 years, probably over 100 years, is Franklin Delano Roosevelt, which was a game changer, and Kennedy, who they took out before he had a chance. But Kennedy had his whiz kids. I mean, back into the 70s, they would talk about JFK's brilliant cabinet that he had. And if you look at history, I don't agree with what FDR did, but because I think he delayed the recovery from the Depression, but he put in enormous changes. And so Donald Trump learned from those people. He hired the best and the brightest. I mean, look, he's got Elon Musk up there, J.D. Vance. I mean, this guy, at the time we said this is the guy we wanted, but he's a brilliant person, a can-do attitude. He worked in the technology sector, made a fortune, came from dirt poor, literally, unlike most people, dirt poor, worked his way up, made his fortune, came to Washington, never forgot where he came from. Look at Elon Musk. Look at all these people, Hegseth, all of them. I mean, RFK Jr. Trump was able to get RFK Jr. I mean, this is like the NFL, and you're trying to pick who can we get out there, and there's RFK. No one is paying attention to him, a Heisman Trophy guy. That people love in this country wants to change it, and nobody. He basically snatched him off the board. The Democrats didn't even realize what happened to them. It was like It was like if you grabbed one of the star players from the opposing team when they're asleep at the wheel. So he's put together this phenomenal group of people, and he's making these big changes. They're talking different departments are taking 8%. They're getting 8% of the workers. They're letting people go. They're cutting costs. They're finding billions and billions of dollars of fraud, waste. I always thought it was just kind of incompetence, but it's remarkable how much is really clear looking. I think there's going to be some arrests made and there's clear fraud. So these are big changes, and they're going to affect things. Oh, tell you what, let's take a quick break and be right back when there's some more of this and what's going on with the market and where should we go from here, right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. We're just talking about what we're seeing. Donald Trump comes in there. He puts in this crackerjack team. He's moving quickly. Now he's moving. He's moving at a much quicker rate. He's going to probably be on to do more executive orders than the only person that's done more executive orders has been FDR. He did 100 executive orders in 100 days. That's where they named the first 100 days. That FDR's team in the 1930 came up with that, and so he's moving forward, but he has to move quickly. We've got $36 trillion worth of debt. We're borrowing $100 trillion every 100 days, 105 days, additional $1 trillion. And so if Donald Trump doesn't do anything and things just go the way they are, the minute we slip into a recession, the debt's going to skyrocket. The world's going to lose confidence in the United States bonds. Interest rates are going to soar, and the dollar is going to collapse, and it's going to wipe out into a hyperinflation the American people in real time now. So these things. So he has to move very quickly, and that's what he's doing. And so we're going to see these big changes happen.
Okay, do you have time in mind?
Okay, yeah. Tell you what, let's take a quick call from Charles. Hey, Charles.
Good morning, Ted. Yes, I have a question. Involves a company that has been told since 2017 that they cannot grow their assets. And the company I'm
Is this Wells Fargo?
Yes. And I just got to ask you, on the surface, does it even seem legal? I mean, because I guess the question that I have is this. The company back in 2017 had that fake account business and all that stuff. You know, they fired the CEO. They fired a bunch of executives under the CEO. They paid billions in restitution. And then they lost a whole bunch of customers. And then they've been working through all these consent orders that have been given by a third party that reports to the Federal Reserve. But the point is that this has been going on for 8 years. And I know of no company in the United States that has been been told or directed by the government that you cannot grow your assets. And, you know, this almost seems kind of heavy-handed here and politicized. What are your thoughts on that?
I think it's been very politicized. Look, the Biden administration was run by a bunch of flunkies out of the White House. I mean, clearly Joe Biden, honestly, I don't think he had any idea what he was even there half the time. And so you had a bunch of little radicals underneath him and the Consumer Protection Bureau and the Fed. Look, the theory being look, this is a major bank. We have to sit here and if it fails, the FDIC is going to has to make the payments to the government, and we're all going to be in trouble because of this. And so we're going to make sure that you can't grow your assets, and you have to build your capital base and show us that you can actually properly follow the rules. Now, it was very draconian. I think it's over. Wells Fargo it's probably it's run up since last year from about 45 up to 77, so it's had a big run. I think this bank has more time. I think that they got some more time to get something done. I mean, it's just actually as I'm talking to you, I've got to realize, got to help my mom. We got a safety deposit box. They're shutting down the bank, and we got to move it this month. And so they're closing branches all over the place, and they're rationalizing their operations.
Well, all I'm saying though, Ted, is it's been 8 years. I mean, I don't know what else they want with this bank, but all the analysts are rating this thing fairly well. And back when the consent decrees and all were imposed on it, from a capitalization standpoint, they were one of the better banks. I mean, compared to like the Bank of America or anything else. But I guess the point is that, I mean, for the government to come in and literally tell a company, and I mean, if it can happen to them, why couldn't they go to some other public company and do the same?
Yeah, Charles, look, this is why Donald Trump won, because these radicals were doing this stuff. I mean, they use some special things or special cases to the banks. And look, to be Wells Fargo, if you want to deal with bank employees are the most honest people in the world. They're very cautious. They won't make, they don't like mistakes. Everything about, well, somehow the upper management at Wells Fargo convinced their employees, because they were under so much pressure, to basically rip off the consumer, to deceive them, which is really extraordinary. I mean, I wouldn't have done this. Honestly, to me, they should have just asked for the resignations of the entire staff and then clawed back bonuses. I think they did claw back some bonuses on the top side, but
they absolutely did.
Yeah. So anyway, that's the answer to the question. Is I think it's really been overkill. They're going to leave the bank alone.
Well, the thing of it is, and I'll let you go, but just one quick item. I understand that a third party is the one that's been issuing these consent decrees, and it's this third party that has to finally agree to the fact that, okay, they've done all they got to do, and then it's up to the Federal Reserve to vote and then to lift the asset cap. But to me, I don't know who this third party is, but to me, I think that's where it needs to be brought out.
Consumer Protection Agency, which I think is funded by the Federal Reserve, and Trump is going to clean this garbage up.
Well, I think they funded that, didn't they?
Yeah.
Yeah.
So
okay.
Look forward.
All right. Well, anyway, I was just wondering about the legality of this, more than anything.
Yeah. And thanks for the call.
Sure.
Here's a couple things in the bank I've noticed this week. Warren Buffett, it came out. He's been selling, and He sold bank. He cut his Bank America stock about 15%. He cut his Citigroup 73%. J.P. Morgan is going to sell about another $125 million or $150 million worth of stock here in the next 6 months as well. There seems to be a lot of people suddenly scrambling out of the banks. The banks have had a big run up because the deregulation is going to help out because Donald Trump is going to help out, and it's exciting. Because interest rates are going to come down. Look, interest rates have not been coming down. And the other thing is the real estate market is in pretty bad shape. It seems to be getting worse. Mortgages are over 7%, and we're probably 6 to 9 months into a real estate slowdown that I think is going to probably accelerate to some extent given the situation with interest rates. And so I'd be careful with the big banks overall because I think they're going to come under pressure here. And they're pretty expensive. So Trump is coming in, and he is putting big changes in place. As we said, he's got a crackerjack. I mean, these people. This is the most exciting cabinet. If you're a conservative Republican, a Trump guy, you should be thrilled with the people he's put in place because he realized he can't do it himself from the first time. He learned a lot of lessons, and he's applied them brilliantly. He's gotten rid of the people that, I don't know if you remember the first Trump administration, these leaks would come out of nowhere. He's gotten rid of the people that were leaking. There's no leaks coming out of this administration. These people are all in sync, moving together. They've got big changes, and they're putting them in place. It's exciting. But look, he's going up against the most powerful people in the world, the Europeans, the deep state, as we just said, the wealthiest people around Washington, 7 of the top 10 wealthiest zip codes are around Washington, D.C. These people are making fortunes. And how it kind of works is they'll get a grant for 20 or, say, $30 million to, put aid to some country or put together programs in Bolivia. Well, what happens is they'll bleed off 10 or 15% or 20% for overhead costs, and if it's $20 million, that's $4 million in these people's pockets, and so they're getting rich. They're going to try to come after Trump. I mean, look, make no mistake, the Democrats are furious with him, the Europeans, the deep state. There's a lot of people making millions and billions of dollars off of the government. I mean, we're seeing shocking amounts of fraud and really graft in Washington, D.C. And so they're going to try to come after Trump. The market was at all-time highs, Wednesday. And by Friday, it fell down to the 50-day moving average and had a pretty substantial drop. I think you've got to be careful in here. I think they're going to try to come after Trump is on a roll. They're going to try to do something to stop Donald Trump. These layoffs are coming up. We're talking substantial layoffs, 5, 6, 7, 8% in some departments, closing down some departments completely, merging departments. There's a lot of people losing jobs. There's thousands of houses going up for sale in Washington, D.C. Property values are falling. That's going to slow down the economy. I'm hearing, people are being laid off in the military. They're being laid off in the agricultural department. At the park rangers are being laid off. I mean, there's lots of people being laid. IRS, all over. I mean, every department is going to see layoffs. Partly because they want to reestablish their priorities, but this is going to cause a slowdown. But it's going to spread. Look, there's a lot of big cities and a lot of states that spending's out of control. The reason why, one of the reasons why, top 2 or 3 reasons is he's moving so quickly is he doesn't have a choice. If he doesn't, they're going to lose confidence in the dollar and our U.S. treasuries. Well, there's cities that the same thing is starting to happen. When they see the big cuts coming out of the Doge Commission, they're going to go, well, why don't we do something like that? So I think you're going to see a lot of cuts across the country in layoffs in government, and it's going to spread. That's going to slow this economy down to some extent, which is going to be good if people can see real legitimate cuts, real changes in government, like, hey, maybe I have confidence that the government's not going to be, spending $1 trillion every 100 days into infinity and do nothing but just print money and wipe out everybody in a hyperinflationary depression. Maybe I'll take a chance and buy these bonds and the rates will come down. But you've got to see these big changes come about. So that's going to cause rates to go down. An economic slowdown could cause rates to go down, and it's also going to affect a lot of different companies out there with earnings. I mean, as we just talked about with what's going on with United Healthcare, well, every other health company's out there looking to make sure they're not ripping off the government and straightening up. As we said, the banking sector, real estate's coming down. In the consumer sector, look at Walmart. Walmart the thing that kicked off this big sell-off in the last 2 days has been Walmart. Walmart said, well, things aren't really that good for consumers. The other day, I was up in New Mexico, and I drove by. There's a line of cars. They're sitting on the side of the road. It was early in the morning. Like, what's going on here? Is like a big event or something? And the line's like a half a mile long. And within, I see at the front of it, there's a semi truck, and they're giving away different things. So I asked them. I said, what's happening? So they're giving out commodities. They're giving out like boxes of rice and beans and different things for people. And I was kind of shocked. That really. But people are suffering under inflation. Not everybody has a high-paying government job or any high-paying job. But some people, there's a good group of people in this country that struggle, that don't make a lot of money, and we've not been able to help them out as much as we like, because we got this deep state in Washington D.C. basically making themselves rich at the expense of the taxpayers. But you see this, and you feel sorry for these people that don't have this, and this is why it is so important that we take it to these people in Washington D.C. But the economy is slowing down, and so this is something that we want to watch. The defense sector, they're going to be under pressure. Look, clearly these guys can do a better job at making equipment. We make the finest military products in the world. The problem we're running into is the price. And actually, even more important than that, the lead times on these things are ridiculous. And I cannot emphasize how dangerous that is to have a defense industry, a defense department relying on suppliers that take a decade, years and decades in some cases to bring military. If you're in a war, you need more bombs, you need more equipment. We don't have gigantic stockpiles of munitions as we talked about, because we gave them away to these idiots in the Ukraine. I mean, and so this is a serious situation. So all these departments, they're going to, all these industries are going to under pressure. Banks, healthcare, the technology sector, I think you're going to see more pressure. Defense companies, food companies. We picked up Nestle's a couple of weeks ago, just because we're like, hey, these guys deal with the Europeans all the time. They have pretty healthy food over there, so they can probably integrate stuff over here quicker. Whereas some of the other companies like PepsiCo, Coke, Frito-Lay, and everything else is like, guys, have you looked at the stuff you have? I mean, you can't even get a sugar Coke anymore. Everything is corn syrup, but that's another story. So the sugar Coke is like $3.50 or $4, but that's another. But so all these big things are happening. These are big changes putting in place, and I want you to understand this is not going to go easy. And the market was at all-time highs. I think you're going to see some type of correction coming up. The volume really accelerated Friday. It got a lot worse. They're going to try to rally the market in here. But it's to a lot of people's advantage for the market to go down, so they can go, see, Donald Trump was wrong. He clearly doesn't know what he's doing. We need to shut him down. He's horrible. He's wrecking the country. It's not to their advantage. So this is something we want to watch closely and really see what's going to happen here. I mean, this is the battle of the Titans. I mean, it's really almost we have not seen anything like this in generation. I mean, really, I really think you almost have to go back to Roosevelt or FDR, really, where somebody he was more of a radical liberal. I mean, if you really studied the Depression, he was really a socialist almost, but he put these big changes in because he had the Depression, he had to do something. Donald Trump is putting these big changes in place. Understand, because we have a debt and a financing crisis that is coming at us like a freight train, and it's getting closer and closer. And if he doesn't do something, they're going to get run over. And so so understand these are big changes. We'll be right back after this quick break on the Max Out Savings Show to talk some more about this, what's happening with some of these other things, and what is going to happen with the markets in your retirement after this quick break right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka will return shortly. To speak with Ted Gioka now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
In the 1970s, the big song was the Bee Gees' Stayed Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
If you can snap your fingers, you can find this radio station. So the next time you want to listen to us, your smartphone is now your smart radio. We're always on. This is AM 1070, The Answer.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. Also want to mention one of our sponsors, which is Rangoni Botanical Gin. It's Rangoni Alto Gin and Rangoni Brando Tropical Gin, Motu Gin. They're some of the finest botanical drinks in the world. This is a super high-quality organic gin from the Italian Alps with phenomenal flavor profile. If you get a chance, try it out. It's Rangoni Alto Gin. Look for the kingfisher bird on the label. You can get it at Specs, Total Wine, places like that. Now, a couple other things. We just, if you'd like a copy of our free Max Out Savings report, just go to our website. It's maxoutsavings.com. We send it out free once a month. And by the way, I have to apologize. We had a few more errors than usual. I tried a new system of using AI, which didn't work quite as well as we anticipated to proof it. But the material in it is very top-notch, and we try to take the very complex issues, make them simple so you can understand. Look, we've had top strategists on Wall Street get our reports from time to time, so they're really written for the average person, so it tells you the quality of the material in it. A couple other things. We talk about Social Security a lot on the show. We don't talk about the details. What we say, look, when it comes to Social Security, you want to hold off as long as possible. And I saw kind of a pretty good way to put this, but Social Security, particularly people with bigger IRAs, they come in with $1 million, $2 million, $3 million IRAs or more. With us, and the Social Security isn't as big a deal because these people have a lot of money and stuff. But Social Security is very important for a couple things. It's going to be there no matter what. and so you're going to get your Social Security. It also is indexed to inflation. Now, we use the word index loosely and inflation loosely because we all know that the numbers they give us are chained down and artificially low, but it grows over time. And why this is important is people never run out of money for retirement in the first 5 or 10 years. But oftentimes people they retire at 65. There's a good chance you or your wife could live to 95. That's 30 years of retirement, and so that it's later in life when you start to run out. And so the Social Security is going to be there, and it's going to be growing no matter what happens. So you'll never run out of income there. So you might not think it's important now, but it could be important in the future. So by waiting, every year you wait, your income goes up. So if your Social Security is $1,000 a month, just for simple math, and you wait a year, it goes up to $1,080 a month. And so this until you're about age 70, then it stops. So that's a big difference. So it's good to hold off as much as possible. And the other thing to think about too is with Social Security, your spouse typically receives the higher of the two benefits in the household. So if one person's getting $1,000 in Social Security and the other person's getting, say, $3,400 in Social Security, if the spouse dies, they can keep the $3,400 and they lose the $1,000 one. So again, keep in mind, you're losing part of your income if you lose your spouse, and if it's a pension, it could be even worse on that side as well. So understand, by letting those Social Securities grow as much as possible up to age 70, you're really protecting your outer years of retirement. And something to think about with Social Security. And that's why we always say, look, hold off. If you really don't need it, because some people go, well, I'll just put the money in the bank because the Social Security might not be there. That's true technically, but they're always in countries they take care of people. It's if something really goes wrong. So if you don't think you need it, you never know 30 years. And if no one's, I challenge anyone that could tell me what 30 years in the future, what they'd be doing. And so take advantage of Social Security, maximize it. Even if you don't think it's important, it'll be there. And, hopefully we'll get with the DOGE program, we will stabilize all these programs and move forward. A couple other things. Warren Buffett's annual letter came out. He has more cash. He has $334 billion in cash. I think if you adjust for some treasuries, it's a little less than that. Maybe $320 billion in cash. That's works out to be about over 25% of his assets are in cash. Warren Buffett, he's the type of guy, he raises cash because he wants to have the cash. So when things go bad, the markets plunge down, he can go cut deals with companies that are desperate for cash or help, and he can make good deals. Keep in mind, he's still selling his Bank America. He collected that he got the preferred stock, convertible preferred stock in 2008. He got I think it was like 8% preferred dividend and plus it convertible. He's made a fortune off of it, but you got to have the cash. This is why at Max Out Savings Advisors, for our clients, we tend to run a lot of cash because we want it when opportunities come up. It doesn't do you any good if the market plunges 25%. And oftentimes when you see something like that, stocks can go a lot lower than that, the individual stocks, and you go, oh, this is a fabulous deal. Well, then you got to sell your stock that's down as well, so it doesn't, do you any good. And keep in mind, most money funds are yielding 4.5%, 4.3%, just depends. So you're getting pretty good pay while you wait for the opportunity to come up. There's real value to cash out there overall. So this is something I think we want to look at. We looked at some of these markets this week. To me, it's interesting. If you look at the S&P 500, it really hit a new high a couple days this week, and then all of a sudden it fell apart and went down to the 50-day moving average within basically 3 days, and that's not a positive sign. They've just kind of been pushing the market up, and then media talks about the new high. There's an enormous amount of speculation, particularly in the tech stocks and different things. They've really gotten hit the last couple of days. A lot of these speculative stocks have really plunged. The high growth stocks, big drops in the prices of these things have been coming up, pretty much across the board. And I think there's a lot of speculators, particularly in the public, using margin. They're coming under pressure. And so this is something we want to watch closely here. If you look at the S&P 500, if you look at the Dow, it's under the 100-day moving average. And the NASDAQ is now under the 100-day moving average. These things are very expensive up here. If you look at this, if you look at the NASDAQ, this thing hasn't made a new high since mid-December, and there really seems to be distribution going on, which is big money selling these things, kind of going into other stuff because the valuations are so high. It really, if you look at the broader market, the NYA, kind of the same thing. December really didn't hit a new high since November time frame. Again, a breakdown. The 50-day is. We look at some technicals to kind of get an idea where this is going. 50-day moving average is crossing under the 100. That's not good. And the end is the composite. Again, a big drop on these markets. If you look at the oil price isn't doing much. Again, this is telling us the economy is not that good, which kind of is dovetailing to what Walmart is saying as well. So this is something that we want to watch. Now, here's the interesting thing is, if you look at the biggest winner is the gold sector. Gold is up again. Gold is up, I think 8.5% year to date. Beating the S&P 500 again, as we've been talking about. The sector sold off some on Friday, but even the gold itself is $2,953 an ounce, which is a huge move up. Silver is lagging. We like the silver. You could see with the gold. You could see a correction. Really, you got to ask what is going on. A couple things in the gold sector we're seeing in particular is the move on this thing has really been extraordinary. I mean, it's just straight up. Somebody is buying the heck out of gold, and it's not Wall Street. There's really not been huge surges into the GLD, which is a gold ETF. It's been foreigners, it's been Chinese, it's been Indians. They really appear to be buying something. I mean, 2024 was a good year, and they've just really built on that as they're going. We're also seeing enormous amounts of gold pouring out of the London Gold Exchange into the United States or elsewhere in the world as people are stockpiling physical gold and silver. Looking at the gold, this thing could have a pretty big correction. The silver hasn't made the move. If you look at silver, it really was 22 to, it was about 22 to $26 a share in 23. In 24, it went up to, maybe 28, 29. It's only at $33. Typically, when you get these big moves, you get a parabolic move up in the silver, huge amounts of buying, and then people go, well, wow, I bought my silver at $25. It's at $50. I'm going to dump it. I made a big. These people, you're not going to see huge amounts of physical silver being dumped on the market from individuals at $33 an ounce. I just don't. Now, can silver go down in here? Yes, but this is not like some blow off top in silver. It's a very, very solid base. It looks like it's going to break out above the base. In the past, we've had silver run up to $50 or more, about three times in the last 50 years or so, and then it just collapses. Keep in mind that was $50 from decades ago when $50 wasn't really $50, and so I don't think, and even back in 2020, gold was really trading at it jumped up from about 15, then it went up to $22, $28. So it's basically 5 years, going on almost 6 years now, where you're building a big base in silver, which is really from about 23 up to $28, and it looks like you're starting to break out of that. Again, very strong. The gold and the silver stocks were down Friday big with everything else, but if you really look at they're still coming in with huge numbers of growth on these companies, and I think it's going to kind of continue there. I think this is one of the sectors we're actually more comfortable with, but I think overall you just got to be cautious in this market. It's had a big run. Donald Trump is on a huge roll, and there's a lot of people who'd like to see that stock market sell off. Therefore, they can sit and point to Donald Trump and say he's doing a horrible job. And so I think we want to be cautious on that. I think they have to make sure it doesn't get out of control on them. This is something everybody's watching. So you've got inflation's going up, you have high interest rates, you've got massive layoffs across government. We think it's going to spread to state and local governments because they're going to lose a lot of their funding from the federal government. And so this is going to cause a slowdown. So I think you want to be more cautious in here and take advantage of this. A couple things. If you need some help, we manage retirement assets at Max Out Savings Advisors here in Houston, Texas. If you'd like some help, just go to our website, maxoutsavings.com, and you can request an appointment, and we'll sit down and show you how we manage money using our value investing approach. We typically open an account up at Charles Schwab, or if you've got an existing account at Schwab, we can manage it for you as well. It's a pretty simple process. But if you need some help, go to our website. And also, remember our motto, not our motto, but our newsletter, which is the Max Out Savings report. It's completely free. We're not going to bother you. We're busy. We just stick with what we're doing. We write the report to help people out deal with retirement and deal with a very complex world that's changing so quickly today. I think we do a really good job at it. Overall, we try to bring you things you're not hearing about from everybody else. And so it's the Max Out Savings Report. It's completely free. If you'd like some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. And just request a free report. We'll set you up. And also, remember our motto and philosophy, which is to save aggressively, invest conservatively. That's the key to building up wealth in the world today. It's becoming an increasingly complex world. It's going to be much tougher. The volatility is going to go up, and so you want to be able to, in a position to take advantage of that. And so if you need some help, go to the website. I think we can help you out. Hope everyone has a great weekend. We'll see you next week right here on the Max Out Savings Show. Remember, you can also catch the podcast at the if you go to the KNTH website. It's the Max Out Savings Show. Thank you.